On this episode of the Paper Stack Podcast, we look at Ken McElroy and Stephan video and look at, is there going to be a housing crash? And if so, when will it be? Next on the Paper Stack Podcast.
Hello and welcome to another episode of the Paper Stack Podcast. My name is Brett and this is Rick Allen.
Yes.
And we are here today to talk about a subject that we hear quite often in the industry because of the kind of stuff we talk about, mortgage notes, real estate. And it goes around what's coming or if ever a housing crisis.
Yeah, what's going on in the housing market? Isn't that really it? It's like so many people, and that's always kind of a question, where the housing market's going, what's it doing? Certainly over the past decade, you've had multiple people come out and offer guesses on what's going on in the market. Back to in 2006 and 2007, you had the investor who made, for the Big Short, who made the big bet against the housing market. And then all throughout the early, 2010 through 12, 13, 15, what's the recovery going to look like? And then over the past couple of years, the market's just been on fire. Yeah,
I've been watching some stuff by Ray Dalio. And so he talks about different stuff. He's talking about different markets. He more focuses on, the financial markets. And he was showing a little bit about how Bitcoin and some of that pullback that they're doing from regulations might affect, what might happen in the stock market. But today we're going to be looking at what's happening in the real estate market. And we did view some videos. Who we viewed some videos from?
Yeah, we did, from Ken McElroy and Stephan. Great channels. Go check them out. They've got tons of great content, and they're putting out new content all the time. Mm-hmm. Graham was really dives in deep, provides tons of feedback. Ken too. Yeah. He had some different insights, and they both resonated with me a little bit. A lot actually, because Ken spent a lot of time talking about forbearances and stuff like that. And, I've got a lot I'd like to put in on the forbearances as somebody who's in the trenches and still seeing what's going on with that market.
Another good thing, though, too, is that these were, Graham's was in 2020. Mm-hmm. So his was in, I think, December. And then Ken's was, I think, it was in late February. So now we're looking at things a couple months prior to that. And so there have been some new changes over the last couple months.
Yeah.
And so, we can add a little bit more value there.
The difference. Biggest one, I think, is going to be the stimulus rolled out, right? 1.9 trillion in stimulus hit, and that hits the economy, and you're starting to see it already hit, Brett.
Oh, did? Okay.
Yeah, the stimulus checks.
Oh, okay. I thought you were talking about another one.
No.
Oh, okay.
No, yeah, you already got that one.
Okay.
So there's more coming out. So, starting, one of the things. It's, you start looking at the real estate market, and it's always an issue of what? Supply and demand. Mm-hmm. What's the supply look like? And one of the interesting things definitely that Ken was talking about is he kind of dives into, well, what's a stable market? Mm-hmm. And I thought that was a really interesting thing. And according to the Board of Realtors, a 6-month supply is considered a stable market. Mm-hmm. Well, last year, around, I guess it was January of 2020, we were looking at around a 3-month supply. So already we were at the sort of, we were already stressed a little bit as far as the amount of inventory out there. Interest rates were historic lows, 3.7%. Mm-hmm. And now I think they're at 2.71 on a 30-year fixed or something. Just something absurd. But this year, as of February this year, we're at a 1.9 month supply. So we've dipped below 2%, 1,070,000 listings available, according to the Board of Realtors. It's, by the way, it's realtors. Don't ever say realtor, because those realtors, you'll get a little fussy about that. It's pronounced realtors. It's funny that, because I am a realtor, or at least I was in my past life.
Realtor.
Don't say realtor. That's not right. It's realtor.
Realtor.
There you go. You got it. Okay. Anyways, inventory is low, and with interest rates low, obviously that means supply is low. Mm-hmm. There's a higher demand. There's people, moving out of higher priced states, especially localized here in Florida. We can talk in depth about our market.
It's just crazy.
It's nuts. People are coming down and they're paying sight unseen on houses, and they're paying 20% over list price, sight unseen.
And houses are going for hours, like same day type stuff.
Oh yeah,
Full price offers.
Full price offers, not house not even seen, because people are just like, it doesn't matter. I just want to buy a house down there. I want to get out of the state I'm in. Who doesn't like Florida? There's no state income tax. The weather is arguably pretty darn good most of the year.
Until like August, September, that's a little toasty.
July, August, September definitely are down months.
Yeah. It gets a little hot if you're not used to that. Yeah, there's roads that I was driving recently coming back from somewhere, and I thought I was lost. And I was like, where am I? And I looked around, I was like, I don't recognize any of this 4 lanes with what was 2 lanes, and all of it's new development. All of it's new development.
It's.
And I was like, I figured it would have gone one day because it was all orange groves on a lake.
Yeah.
I was like, why hasn't that gone up? But then as soon as it did, it was on Turkey Lake.
Yeah.
And I was like, oh my God.
Oh, yeah, I know what you're talking about. Yes, that is incredibly changed. Actually, out past Westgate, over towards, Apopka Vineland. Yeah, it's insane.
Yeah, so.
But they don't really care about that. No.
They live in Orlando.
Also, it's something, so it's interesting. So you're faced with this this dilemma of you've got really low inventory, and you're wondering, like, okay, so what's going to happen? Where are we going to get inventory from to boost it up? Because if 6 months supply is normal and we're at around 2 months and we got about 1 million listings, so you're looking at about 500,000 is a 1 month supply. So, I mean, it's easy math there. We need to add, about $2 million or 2 million listings to put us somewhere between 2.5 to 3 million. Well, the building aspect of it.
Yeah,
right?
Talk about that.
The building aspect. So I've got a good buddy of mine, very good buddy. We summer together and vacation together. He's a general contractor. Yeah. And there's this, I was talking to him about what's going on in your industry, and he's like, well, I just, had somebody. I had to break the news to some of my clients that I bid their house. We've been in, going through permitting and having everything dialed in with the architects and all that stuff. And since I put it under contract with them and I won the bid till now, pricing has changed so much on material. I'm like, well, what do you mean? He's like, well, the trusses, which are what you set the roof on, basically part of the house. He goes, they were $20,000 when I bid this project. Now, less than 12 months later, they're $60,000.
Is that per truss?
No, just the overall cost of the trusses.
Gotcha.
You look at the price of lumber. Everyone knows what plywood is, right?
Yeah.
Buy a sheet of plywood, OSB, whatever. It was, pre-pandemic, you're talking $5 for a sheet of plywood. You go there now, and actually they've taken down the prices.
Whoa, wow.
On there, but it's around $30
at like Lowe's or something.
It's like $30 to buy a sheet of plywood.
Goes those kids' skateboard ramps. I'll tell you that much.
So, he also got a call the other day or an email from his window provider, and they said effective May 3rd, all product is going up 15% in pricing, just blanket across the board. So you look at that and you say, wow, he's fortunate that he's building higher end custom homes. He's dealing with a clientele that can pay for it. But you look at they're buying their own house. But you look at some of the builders out there, the big builders
doing spec homes and stuff.
Doing spec homes. They're in a situation now on spec homes to where they're potentially losing money if they're under contract.
That's scary.
They are, but it's also going to slow down building growth.
Yeah.
Right? Because it's like, look,
so.
And it's not just an issue of pricing going up, because the pricing is going up. It's a result of supply and demand. There's not enough supply to meet the demand. What would normally take 6 weeks to get in, if he had to put in windows or trusses, he could order it and they'd have it in 6 weeks. Now the lead time on it's 20 weeks, and they're still not getting it.
So what that in my head shows is that this person's the contractor is going to have to. It's going to cost him more because he's going to have to hold it for a longer period of time. Where if he was borrowing money, say to build this, now he has a longer hold period for his money, so he has to pay the interest over that. Plus, the price of all the material has gone up by 15%. Plus, there's less supply in terms of the housing market. So now you got this like triple thing. It's coming on all different sides. So which will make what the house prices of the new homes are just going to be double.
Well, yeah, I expect that like I expect housing to soar again this summer. I expect the next couple of months, it'll be a little bit localized as far as, places like I expect Texas is going to see a huge increase in their average price of a home. Florida is already seeing it and is going to continue to see it.
What does that do to, say, people that are in the fix and flip business? Because now they're competing against contractors that are trying to do spec homes for the same material, and now they have that same type of problem where they're trying to get it at a discount and then try to flip it. Are they going to?
You run it. I believe, my 2 cents. Take it for what it's worth. I mean, I've been through this market before, which I'm glad. This is not my first time. Mm-hmm. In 2005, 6, and 7, I was in the fix and flip business, right?
So how is this different from then?
It's the difference now is rates are cheaper. Yeah. So money is cheaper, though the lending box is not as big.
Yeah, it's a lot tighter.
Before if you could fog a mirror, you could get a loan. And some people who couldn't fog a mirror could still get loans. Yeah. You had bartenders in bellhops I knew that had 10 mortgages at one point. 10 mortgages for a bellhop.
That's insane.
Those guys, huh?
Had them like
adjustables, everything. Oh, yeah. So, but
that was a problem.
Those loan products are not available. Mm-hmm. So what you have now is you have people who have, if you're highly qualified, you have an open checkbook to go out and buy real estate. The prices are going so high right now. I talk to a lot of flippers who are like, I'm just changing my model, because it's when it gets out of whack like this and it just becomes really competitive. It becomes very volatile too. When prices are running so high, mm-hmm. It's that much easier for them to run down.
Yeah.
So
how could they get stuck with, holding their bag? Is there a way that somebody, or is it just that they're...
Well, essentially what would have to happen is you need an influx
of inventory.
And so that's kind of one of those things where you look at like, okay, where's there like this massive amount of inventory, this amount that's just like, look, somebody needs to go ahead and to put this onto the market. Well, you kind of look at the untold story of delinquencies right now, right?
Oh, that's very true.
There's, within the forbearance market, there is 600,000 people that were on forbearance plans mm-hmm. that they were coming due in March. Another 400,000 that came due this month in April. So that's 1 million. I mean, there you go.
And this could go all the way to mid-2022, right?
Yeah, there's something of all the FHA-backed mortgages, mm-hmm. 10% of those mortgages, 10% were at least 30 days behind.
Where were we in 2008 when we were at 10% delinquency that started the whole debacle, right? It was about 10%.
It was around 10%, but that was like nationwide. That was not just FHA.
Oh, then not just FHA.
See, so the thing about FHA is right now is it's FHA.gov, so the government kind of controls what happens there, mm-hmm. and so they have foreclosure moratoriums. Well, for all those other loans that are not necessarily being reported on that are delinquent, those loans are falling into the hands of other banks that are not FHA-backed or government-subsidized entities or private investors. And the private investors at this point are just waiting on courts to open up.
Yeah.
Because there's courts the courts are still closed. You can't really foreclose for the most part on anything. Once that happens, though, you've got a minimum of the past 12 months of money that's been accruing on past due
that's going to be
interest.
Be crazy.
And so investors are now faced with the situation of like, look, I can maybe try to work with this person and get them to stay and keep their home, which some people will. But other ones are going to say, I can take this house back, I can foreclose, and if I get it, the price of real estate has gone bananas, and I've got a situation to where there's a lot of money sitting there, a lot of equity, that if I can pay them, $5,000 to sign the house over, I get the house back immediately, and I can go ahead and list it.
I remember hearing Kevin Shortell a couple of years ago at a meetup, when we used to still do those, is talking about how it's different now for the people that, for example, FHA and like the large banks, to the Quicken loans and the Rocket mortgages. Those are a whole different, that spurred out of that to basically get around the rules when this would happen again. Mm-hmm. So I'd imagine their time to like foreclosure and get them off the books and turn them into notes would be a lot faster because they don't have the same regulations.
They don't. There's not the same red tape, right? Mm-hmm. So like, right or wrong, there was a foreclosure moratorium put in. Trump put it in. Mm-hmm. Biden has extended it, mm-hmm. right? So at some point, this foreclosure and eviction moratorium will have to stop because we're essentially what we're doing is we're kicking the can down the road. We're well past 12 months now. When this continues to move along, if maybe it goes through the end of the summer, well, that money is still owed. It's real money. You can say you don't have to pay it now, but eventually that's accruing.
Another thing to consider is not only that, imagine all the people that actually own rentals that have a mortgage on the rental and they're not getting the money from rental moratoriums. They're not getting the money paid for the rent, which would cover their mortgage. So I think they would have a faster, okay, get out of my hands. I don't want it anymore. And then so you have this person stuck, right? I mean, that person doesn't have as much like emotional equity in that house because it's basically a rental and he's getting shafted by the, getting the money for rent.
Right. And so you kind of look at there's a situation where the person who owns a property with a mortgage on it that has a renter in it, you're like, well, I think it's like 3% of all of the mortgages out there are underwater right now, mm-hmm. meaning that they owe more than the house is worth. So 97% of the mortgages out there, there's equity.
Okay.
Well, the problem is if I own the house and there's a renter in there and I'm like, the renter's not paying, therefore I can't pay my mortgage. I just want to go ahead and sell the house. Well, typically what do you have to do to sell the property? You have to be able to show the property, right?
Oh, yeah.
And if I've got a tenant in there who's not paying, they're probably not, we probably have some friction between us. Mm-hmm. So I got to talk to them and say, here, I need to get in to show the property to sell it. Well, who wants to buy a property with a tenant who won't let you in, or even if they will let you in, there's a tenant in there and I can't evict him and get to the house. Like I have to wait for them to get out. And there's no end in sight. So you have gridlock, right? Yeah. Mm-hmm. The thing is, though, is once you open up the courts, once you remove the moratoriums on eviction and foreclosure, all of a sudden you can start evicting people. I can get them out of the house. Once I get them out of the house, I can put it on the market and sell it. Mm-hmm. So, or if you're, an investor, you're like, I can start foreclosure. I've got 4 houses in Chicago that were about to go to judgment, which means I was going to have a sale date set, and they got put on hold because of the pandemic. So I have 4 that are like, look, all I need you to do is give me a court date. And I've got 4 houses that are going to go through foreclosure.
Wow. Ready
to go. Court, the case is done. I just need my sale date.
So after, having watched Ken and Graham's videos, how does your opinion differ in terms of, do you think there is I know Graham said there's not going to be anything that's going to happen. I think Ken was kind of leading to that same idea.
I agree. I think we're going to see an increase. I think housing prices are going to go up. And I think June, July, and August, you're going to see some explosive growth again. I'm telling my mom and dad, if you guys want to sell, now is the time to do it. And then I think you need to have, once the foreclosure moratorium and the eviction stuff is pulled down, mm-hmm. and the courts loosen up, I think that at that point, you're going to start seeing an increase in inventory. Ken made a great point. You're going to see people who are in forbearance are going to say, okay, it's time to sell. Mm-hmm. And so they're going to be putting inventory on the market. And I think that's going to coincide with a September, October, November of this year. And the thing about it is those are notoriously slow periods.
Yeah.
And so what happens is you're going to have naturally slow sales because that's just where it falls in the cycle. And then you're going to have some people putting houses on the market. So you're going to start seeing almost this bulge or a rapid increase in inventory. So you may go from 2 months to 3 months pretty quickly, or 3.5 months. And I think that's going to spur people to start putting stuff back on the market. Interest rates are going to stay low. And the global supply chain on lumber and construction materials, eventually that kink is going to get worked out. Issue is we were running into was tons of people not wanting to go back to work or not working because they're getting $600 a month or because it's not safe to work in the factories. I think as more vaccines hit, more people get vaccinated, those global supply chains start to sort of work themselves out. But I think you're looking at through the summer, you have an increase in pricing yet again. You'll see a tapering off Q4, and then I think you see a small drop in like probably Q1, maybe Q2 of next year.
So I have a question that maybe other people are thinking. So imagine you have done the forbearance, right? You haven't paid your mortgage for, let's just say, I don't know, a year so far, right? So maybe you've taken all that money you were going to pay towards it, or maybe you don't have it, but whatever, you haven't been paying, but your house value has been going up. So now it comes back to where, hey, the forbearance is going to be lifted, and we got to figure something out. We got to either, give the mortgage company what we owe. I mean, I would imagine a lot of people would get to that point where like, okay, we can see it's going to be lifted in, to say, November. All right, well, let's list our house in September. And because values have rose so, I didn't have to pay anything for the last year, and I've made this delta on the top, and they just walked away without having to pay anything, walk away and...
Wrong?
Okay.
Wrong.
So tell me how I'm wrong.
So what happens is in a forbearance is it doesn't mean that the interest stops accruing. You still owe money.
Yeah.
It's still accruing. It's just you don't have to pay it right now. But that money is still due. So
they would have to give that back, but if they had anything left over.
Right. So if I owed $100,000 and I stopped paying, and I was paying $1,000 a month, and I let it go for 12 months, I owe $112,000 now, as opposed to just $100,000 because I didn't make those 12 monthly payments of $1,000. So some people who are not going to want to sell their house, they'll have an option. They could go to the bank and they can say, "Hey, I'm interested in doing a loan modification. Can we take that money that's owed, put it on the back end of the loan? And if it's a GSE, they'll probably work with you and do a loan modification. If it's a private investor, there's no telling what a private investor is going to do.
I mean, I almost would feel that actually would work out for all parties, though, because if they get a new mortgage, they're paying it down. There might have been that amortization schedule where they're paying more towards the principal. If you can structure them in a whole brand new loan, then that whole thing starts over where they're paying.
It could, but then you may have somebody coming along saying, well, these are all newly originated loans. Let me see your origination docs or something like that. So there's costs that are going to be incurred along the way. So it's going to be a big okay, well, what do we do with all these things? I do know this, that, if you're looking at a company who's got maybe like a 10% issue, like 800,000, if 800,000 people come to, or is it 3 million or something like that for FHA, they come and all of a sudden they're like, here, we need to modify these loans. Now you've got somebody, they have 800,000 loan mods they need to process. What does that look like? What's the time frame on that? I tell you what, it's going to be a nightmare. It's going to be, it's going to be something where, it doesn't get worked out. I mean, Brett, do you realize that there's still
stuff
from 2008? There's still pools of assets.
Have they not improved the systems over this time, you think? No? So I guess, one of the last questions I want to ask is, how does this really affect the mortgage note industry? Because we've been talking about rentals, we've been talking about forbearance, we've been talking about just real estate in general. But I want to know, because, our audience is predominantly real estate notes. And so how does this affect it? If you're a note investor looking, what can you do? Is this going to affect your
I'm loving it because eventually there's going to be a large glut, if you will, a large amount of inventory that's going to come available because you're going to have, 1.8 million loans that are just like, boom. These loans are now in the delinquency or deeply delinquent. What can we do with them? Well, we can process them, or we can turn around and sell them.
And do you think these things will be sold off? Like, we hear stories of what happened in 2008. Oh, I bought this at 10 cents on the dollar.
No, that's not going to happen.
No.
It's not going to happen because in 2010, when stuff was going out the door at 20 cents, real estate was, estate was in the toilet.
Mm-hmm. Yeah,
right now, there's going to be discounted loans, but it's still going to be held up by the real estate market.
That makes sense. So 30 cents on
Lots, yes. Lots to consider, right? There's a lot of stuff, a lot of moving parts. And of course, at the end of the day, nobody has the crystal ball. Nobody can see exactly what's going to happen. You know, they don't have the, what was it, Back to the Future, where he had the sports almanac and he could go back and see.
Oh, yeah.
Oh, that was the best. I always wished, I was like, man, I wish I had that.
Biff.
I didn't want to be Biff, but I was like, that'd be so cool. I was like, you could just do like one 10-team parlay and you'd just be done.
I know. Yeah, that's crazy. All right, so we got, I guess we got some information there that
definitely
dug deep. Kind of covered everything from rental to forbearance to, what we saw in the other videos.
Yeah, it's like reading the tea leaves, man. You got to look at a bunch of different stuff. I loved what Ken and Graham talked about. A little bit more. We were just in review talking about some of the construction pricing on how new construction is not really going to help help the inventory just because there's a kink in the supply line. So that doesn't.
Wow. But wait, if all those spec homes go empty.
They won't go empty, but it's just, like the big builders, they're allowing people out of their contracts right now. Yeah, they're saying here, if you want to get out of your contract, we'll give you your deposit back. It's like, well, why would they do that? Because normally they will never give you your deposit back. You put a deposit down, you walk away, you're walking away from your deposit. Well, they took a deposit and signed a contract with you, and all of a sudden the price of trusses went from $20,000 to $60,000, and there's a 15% increase in the price of windows, and they're building, 1,000 homes in a community. They're going, oh no, we have to sell this house for more to make a profit. If you walk away from it, they can turn around and sell it for more because the real estate market will carry it. If you don't walk away from it and you keep your deposit with them and you buy it as is, well, you're walking into a house with equity.
That's crazy. Could you just sign over your
sign the contract? A lot of times there's provisions like that within the contract there that allows you to assign your contract.
So buyers could actually sign their contracts and not even have the house and walk away with $20,000-$30,000 because someone's willing to pay that much.
Yep.
Wow. Gosh, there's so many things to think about. Just, as these things.
There's so many different little opportunities too. You could walk into somebody and say, here, you want to assign me your contract? I'll buy it.
That's a whole different market. I mean, that's a whole market that's probably not even. But how many people that at least.
That was going on in 2005 and 6, I know. Mm-hmm. I know people like Stony Brook West.
Yeah.
I knew when that whole area, it was a golf course community here. They've since shut the golf course down. But I remember when that was being purchased, one of my good friends was buying in there. Mm-hmm. And she put up 2 or 3 houses under contract to buy, or to have them built. And then she waited 6 or 7 months and she sold all the contracts. And she made $40,000 just from selling the contracts. Because if you remember, 2005, the market was,
It was crazy.
It was going crazy.
I know. I remember I came back from Japan and I was like, I'm not buying anything. But that's that. Well, that was a good episode. And of course, like always, if you have something that you want us to cover or Rick cover, we can always do that. And I'll ask the questions.
Those are good questions, Brett. You kicked it into high gear.
Well, yeah.
Second level questions. I like it.
Yeah, here we go. So, but that's it for this one. We'll see you on the next one. And talk to you soon.